Okay, we're going to look at 5-1B, classifying costs. Cromwell Furniture Company manufactures sofas for distribution to major retail chains. The following costs are incurred in the production and sale of sofas. And then it lists them, A through I. If you have an actual textbook, you're back up here, J through T. Classify the preceding cost as either fixed, variable, or mixed. Use the following tabular headings and place an X in the appropriate column. Identify each cost by letter in the cost column. So if you pull your working papers, your letters are already on there. I'm going to go ahead and circle 5-1B so I know which problem this piece of paper goes to, so I'm turning the wrong one. So letter A says fabric for sofa coverings. Well, anything that has to go into creating the sofas is going to be a variable expense. And the reason it's a variable expense is because we don't know how many sofas we're actually creating. Okay, so letter A is going to be a variable cost as well as anything that goes into creating the sofa itself. So letter B, wood for framing the sofas, is going to be the same thing, a variable cost, because we don't know how many sofas we're creating. Letter C, legal fees paid to attorneys in defense of the company in a patent infringement suit, $25,000 plus $160 per hour. So we have a fixed rate of $25,000 and we have a variable rate of $160 per hour. So that's going to make letter C mixed. So we're going to put our X for letter C in the mixed cost column. Letter D, the salary of our production supervisor. Okay, letter D is going to be a fixed cost. Their salary doesn't change based on how many things we create. Letter E, the cartons used to ship the sofas. Again, it all depends on how many sofas we create. So that's going to be a variable cost. Letter F, rent on experimental equipment, $50 for every sofa produced. Again, we have no idea how many sofas we're making, so that becomes a variable cost. G, straight line depreciation on factory equipment. Okay, we're talking straight line here, so it's going to be the same no matter what, so that's a fixed cost. H, the rental cost of the warehouse is $30,000 per month. Again, it doesn't change, so it's fixed. I, property taxes on property, plant, and equipment. Again, they don't tend to change unless taxes go up and down, and then you can predict that. So that's going to be a fixed cost. Letter J, insurance premiums on property, plant, and equipment, $25,000 per year plus $25 per $25,000 of insured value over $16 million. We have that, we have that fixed cost of $25,000, and then we have that variable cost that's at the end there. So that one's going to be mixed. So letter J becomes a mixed cost. Letter K, springs for seat cushions. It's going to be a variable. We don't know how many couches we're making. Letter L, consulting fee of $120,000 paid to the efficiency specialist. One-time flat fee, fixed cost. Okay, no variation there. M, the electricity cost of 13 cents per kilowatt hour. That one's going to be variable. We really have no idea how many hours our machines are going to run. It all depends on how many sofas we create. And the salesperson's salary, $80,000 plus 4% of the selling price of each sofa sold. So we have fixed of $80,000, variable of 4%. So N becomes mixed. Okay. O is the foam rubber for the cushion fillings. So that one goes in the middle. That one is a variable. P, janitorial supplies, $2,500 per month. Flat fee, fixed rate. Doesn't change, so P becomes fixed. Q, the employer's FICA taxes on the controller's salary of $180,000. Again, flat rate, doesn't matter how many sofas we make, fixed cost. R, the salary of the designers, flat rate, doesn't matter how many sofas we make, fixed cost. S, the wages of the sewing machine operators. Now, that one's a little different because the sewing machine operators are going to work depending on how many sofas we make. So that one becomes a variable cost, so in that center column. And then letter T, your sewing supplies. Again, they're going to be based on your variable costs. They're going to be based on how many sofas you make. Okay, so here's the top half of our paper, and then the bottom half. So really these costs you can figure out pretty easily. If it's a flat rate, it's going to be the same no matter how many sofas we make, it's fixed. If the amount of sofas changes the cost, it's variable. And if it's both fixed and variable, it becomes a mixed cost. Okay, from here you can head back to your PowerPoint.